Ford CEO Jim Farley says that Ford has a problem. Several problems, in fact. The Ford Motor Company isn't alone in this, given automakers' multiple challenges today. Crippling supply chain shortages, especially of semiconductors, and a costly switch to electrification, one with uncertain profitability, huge recalls in 2023. Everyone is complaining about high costs and low margins. Yet at the same time, cars are less and less affordable for the average American. Ford is showing yet another huge recall, forcing its CEO to finally put his foot down and put an end to the quality control issues. Ford, who had a shocking 67 recalls affecting over 9 million vehicles last year. Ford's defective vehicles even led to the death of one driver. This tragic incident occurred due to an issue with the airbag inflators, which have a high risk of exploding. It's undeniable that Ford is losing the trust and safety. In May 2022, Ford had to deal with another recall, involving over 300,000 trucks. The issue was a fault that could stop the driver's airbag from deploying during an accident. It turns out the dust buildup within the steering wheel cable could interfere with its electrical connection. This could potentially leave the driver without the protection of the airbag. This recall issue has left another collapse in Ford's reputation when it comes to safety balancing. The demands of electric vehicle production with maintaining high product quality is posing a significant challenge for Ford as it navigates the evolving automotive landscape. Most importantly, the costs of these recalls go beyond the financials. Every recall also chips away at customer trust and the brand's safety ratings. In a recent shareholders meeting, CEO Jim Farley announced his intention to deal with the recalls once and for all. His message was clear: quality issues have plagued Ford, costing the company billions of dollars in recall and warranty costs. Choosing profits, unfortunately, over safety, there's not necessarily a whole lot of surprise when there's a recall announced that you know they're happening all the time. Each cell is for charge capability and safety. Ford is striving to establish itself as a leader in the electric vehicle industry, but this relentless focus on electric vehicle production has come out at the expense of product quality, resulting in persistent recall issues that are now out of control. But now CEO Jim Farley is finally addressing these issues head-on, implementing changes to improve their quality and regain customer trust. After General Motors and Tesla both posted record profits for fiscal 2022, Ford Motor Company last week announced a net loss of $2 billion and blamed cost issues and especially continuing computer chip shortages on results that disappointed Wall Street. "We left about $2 billion profit on the table due to cost, and especially to continued supply chain issues," CEO Jim Farley explained. "To say I'm frustrated is an understatement because the year could have been so much more for us at Ford." Ford said on Thursday it left billions of dollars on the table that were within its control and blamed a 100,000 vehicle shortfall in its fourth quarter volume, mostly on the inability to obtain enough chips. The uncompleted vehicle problem should be a temporary setback, although many of the uncompleted vehicles are highly profitable for the company. Ford said it should be able to hit its full-year earnings targets. That's because Ford plans to shift the sales revenue it will get from the nearly completed vehicles into the fourth quarter. There's still going to be volatility around chips. Initially, Asian automakers handled the semiconductor shortage much better than domestic companies. While Toyota has been relatively frank about its supply problems, Ford has quietly halted factories and taken the financial hit that comes with not preparing Wall Street. The average vehicle has hundreds of computer chips, which control virtually every onboard system. They regulate fuel flow, help manage fuel economy, control crash avoidance safety features, and operate lumbar support and seat warmers. The shortage of vehicles, combined with strong demand from consumers, has sent vehicle prices soaring to record highs. Much of the windfall from higher prices is going to car dealerships, which are independent businesses, rather than to the automakers. as most buyers are now paying above the manufacturer's suggested retail price or sticker price. It has been common practice for decades for customers to pay less than the sticker price. Speaking at the recent Wolfe Research Global Auto Conference, Ford Motors CEO Jim Farley was candid about the current situation. Dysfunction and $2 billion left on the table during the fourth quarter were mentioned, but Farley identified the real problem as insufficient improvements to efficiency in engineering, manufacturing, and the supply chain. Fixing this will require what Farley calls huge transformations. But what does that mean? In manufacturing, there is no quantum leap in automation technology readily available which will dramatically lower the cost of assembling an automobile, as Tesla has discovered. Similarly, there is no way to significantly reduce the amount of basic inputs such as sheet metal, glass, rubber, and plastics. Pre-COVID, globalized supply chains already operated on a just-in-time basis, and outsourcing large segments of every motor vehicle was common practice. Broken supply chains have increased those costs, but it will take years for regional and domestic suppliers to become productive enough to bridge the labor cost gap that China offers. Bureaucracy has been attacked at all the Detroit 3 automakers, with waves of layoffs and retirements for over a decade now. And as more and more players enter the United States market, already thin margins get even tighter, despite the short-term pricing power offered by vehicle shortages. So, what can Ford or any other auto manufacturer do? On the margin, better quality control can reduce some costs, and all the majors are looking at a direct sales model that would claw back some dealer margins, although admittedly, dealers don't make much money on new car sales as it stands right now. Or maybe additive manufacturing is the way forward. It would help significantly if engineers can find a way to reduce the insane proliferation of microprocessors in modern automobiles. The shift to software-defined systems has drastically increased complexity, and it will not a significant cost reducer either. Thank you for joining us on this journey into the car nerd. For detailed explanation of Ford's current outlook in automotive industry. If you enjoyed this video, make sure to like, comment, and subscribe to our channel for more captivating content. Stay tuned for our next exploration into the extraordinary realm of cars. Until then, drive with passion and embrace the thrill of the road.